Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is May 23rd, 2012. We have a lot to talk about, so let's get started. I got a couple of trades that I want to talk about, so hopefully I can get this done fast enough. And so I'm going to just zip through this market analysis as quick as possible. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Just a quick update. We came down here. Let me grab my trend line here. We came down. We tagged this mathematically calculated line, and then we bounced off. And then now we have this resistance line here from this gap window, and now we bounced off. And then this morning we kind of came close to this mathematically calculated level, kind of like a double bottom of sorts, and then we came back all the way up there. Now, although it did look like it was a flat day, it was actually very volatile. We actually gapped down today, came all the way down here, traded up, and then we just blasted up through the roof, recovering most of the losses of earlier today. And this is the 10-minute chart of the SPY. Now, if you review the previous videos, I said, you don't want to really chase this market as it is here, and we may possibly come down today, and we actually did come down today, but we obviously recovered. And then, this is exactly the point that I'm trying to make when I say not to chase. I mean, this is a down move. We're now consolidating. In fact, I believe 3 or 4 videos ago, I said that we may come down and start consolidating this way before we get another move down to this 125.66 level. Okay, and then the market could actually already come down all the way down to 121.42, and then but before we get there, I have a level at 125.66. Okay. And because you don't want to trade to the upside, because I do have a target level of 135.72 here to actually initiate a short. We are in a downtrend, so obviously, I mean, any kind of trade you go long with, it's going to be a counter trend trade. But today I'd like to try and get a couple of trades in, kind of a couple of stocks that I want to talk about real quick. So I'm just going to zip through the VIX and the. But as far as the SPY goes, basically the bottom line is I will plan to short the SPY if we can make it to this 135.72 without consolidating first. Okay. However, if we do continue the sideways consolidation before we get to this level, then we'll just need to let it consolidate a little bit more first before we have it break down. And these two levels here are no longer in play. This 200 moving average and this support line here is, in my opinion, no longer in play. I mean, the longer this thing consolidates, the more power it has to push through, and we could easily get to the 125.66, and as very well without a panic in the markets that we have today. 121.42 is not out of the question. This is the daily chart of the US dollar. Okay, so we had resistance here, we bounced off, we came back up, we bounced off again, and then we recently broke through yesterday. This gives downside to the market, and as you can see today, we kind of pulled back a little bit, which gave that market a boost. If we can continue to pull back and retest this support line here, then we should have a minor float up for the rest of this week. And just remember that Monday and Fridays are low volume days, including weekends, and day after long weekends are low volume days, and low volume days gives the institutions chances to prop the markets higher. So you don't want to go short immediately in those days. You kind of just want to wait and be patient and get ready to short, but just look for stocks out there to short, not necessarily go long. Okay. This is the daily chart of the VIX. Again, we came up. We back tested at least 50% worth. We came up, we consolidated here. We came right into almost a 200 moving average, pulled back down into the 20 moving average, created this reversal candle, okay? And then today we came right back into this double top close to the 200 moving average, and now we have this reversal candle pointing down. So if the VIX actually pulls down tomorrow, then that should prop the markets up, including the US dollar. If the US dollar pulls back a little bit, then the market should see a little bit of a higher move. Real quick on the GOD, we came down into this calculated level. We had this bounce. We went long on this play here. We didn't quite make it to this 156.32 level, unfortunately. We already turned over, and today we actually hit this calculated level again, bounced up, and created this nice doji candle on very nice volume. Now, the reason why I'm not going to take this trade is, again, it's going to be a counter trend trade. We've already tagged this mathematically calculated level once. I mean, the more you hit a level, the weaker it gets. If gold can get up to this level, or possibly all the way up to this 162.22 level, then I'll take a short on gold. Okay, I'd say I dip my toes in the water at this level here, and if we break through, then I'll wait for this level here to short gold. I honestly don't think it'll pass this level up there. Speaking of gold, this is ABX, which is gold mining. We went into this mathematically calculated level, bounced right up, and now we're almost into this $40.12 calculated level. Okay, right where the 50 moving average should come in. We do also have another level here, which is 41.49, and then a level here which is 49.91, which I highly doubt is going to get up here. So right in this vicinity here, I'd probably take a short on ABX, and hopefully gold is at its level too, and then I can either pick ABX or gold to short. Here's a chart of GG, which is another gold mining, one of the stronger gold mining companies here, and then we had this up move consolidation, very similar to the ABX, except we have a mathematically calculated level at 38.87. The 50 moving average isn't as close as the ABX trade is. We also have a trade calculated level up here at 44.22, which is possible that it'll hit, but not probable. Okay, and then maybe there's a possibility that 200 moving average can come down a little closer. Actually, that would actually look pretty good too, but I don't really think it gets there. Okay, so long story short, we are in a downtrend. Any long moves that you guys play or long moves that I play, just be sure you're in and out, because any counter trend trade is going to be against you. Even though the odds technically are in your favor, the biggest thing is the trend. I mean, it's like swimming against the current. You don't want to swim against the current. It's very difficult. It's very hard to do. It's easier to just swim with the current. Okay. With that said, I do also have actually a couple stocks, one to go long and one to go short. And the reason why I like to play these long and short plays is because whatever direction that the market decides to go, you can play either one. Okay. I have a chart here of Intel Daily. I missed this trade this morning. It actually went right into this mathematically calculated level, the 200 moving average, and this pivot point here. Also in the Fibonacci 618. I mean, all this support levels told me to take this trade long. My alert, unfortunately, wasn't inputted properly. This trade is not dead yet. You can take a long trade here. However, I would wait to as close as to a stop out as possible. My stop would be anything lower than the 200 moving average, so it's close to the bottom of this candle. If it comes down tomorrow this way, then I would take the trade long, and then that way my stop out is really close, because it is a counter trend trade, so you really have to be careful. Okay. All right, one chart I like a lot is Walmart. Walmart is just screaming higher. I have a mathematically calculated level here at 65.47. We're definitely in the overbought situation. We have a resistance line right here. Okay, let me show you. Let me show you where this level up here came from. Okay, if you zoom all the way back into the year. Okay, let's zoom all the way back to, I believe it was June or April. It won't let me go any further. Let me check the week. Alright, I just got to move the scroll bar here. All the way back in the year 2000 of, I believe it was June. So we do have a pivot point there. And if the markets continue to float higher, then this calculated level here would definitely make sense to take a short. Okay, and you'll be with the trend if you go down. So that's not a bad trade in my opinion. We're definitely overextended and overbought. And if we actually have a doji candle of some sort up here, then that's a dead on higher volume, then that's a dead short in my opinion. Okay, so this is your 7-minute market update. God bless to you all. Thank you for watching. We'll see you in the next video.